Hello, students and traders. This is Joshua Martinez, and I'll be your host and your presenter for today's presentation. I want to go ahead and say thank you to each and every one of you for allowing us to be part of your continuing education growth. Ladies and gentlemen, if you could please be so kind to type in a yes into the question section box, letting me know you can hear my voice. That'll let me know that everything's working properly on my end, as well as everything's working properly on your end. Fantastic, fantastic. Thank you, everyone, for the confirmation of the audio as well as the visual. Thank you, Leroy, Becky, Robert, Gaston, Jeffrey, Nitin, Sam, and everyone else. The current time is 7:01 p.m. Eastern Time. Today's date is April the 25th, 2017. This is a live presentation. It's just after 7 p.m. Eastern Time. I would strongly suggest you grab a pen and a sheet of paper. Tonight is prediction night. So what does that mean? Well, basically, we're going to go through our pound prediction. There are 4 currency pairs in which we need to analyze, and we're going to make sure that you as an investor is well prepped to take advantage of the current breakout that is taking place now. We're going to be going over entries, stops, and limits. We're going to be discussing where to get in, where to get out, where to place limits, and most importantly, how to duplicate the habits of being a Forex trader. So you as an investor, you're going to be empowered with making the decision to place the trade or pass on the trade. And what I want to make sure is that you are in a position of empowerment to be able to make the right decision based upon percentages, okay? So in front of you is the risk disclaimer. Just means that there's risk involved in trading the Forex market. You should never invest money that you cannot afford to lose. Always keep equity management in mind. Understand that we're not CTAs, which stands for Commodity Trading Advisors. What that basically means is this. I'm going to show you exactly what to do and how to do it, but I can't do it for you. You have all the control in the world. You can decide to place the trade, pass on the trade. You can over leverage, you can under leverage. You can decide to choose your lot sizes. You can pick your limits. You can pick your stops. I can't do any of that. You have the complete control, okay? So just make sure you're making the appropriate decisions and make sure you ask the right questions as well. I'll do my very best to answer any and all of your questions, but my main focus of this presentation is making sure that you are empowered with the proper knowledge, okay? So for those of you who are brand new, let me introduce myself. My name is Joshua Martinez, and I am Market Traders Institute's Director of Client Success. Now, I've personally taken a $500 US initial deposit investment, and I've been able to generate over $39,000 US of profit from it. I'm a published author, international speaker, professional analyst. I train tens of thousands of investors from all around the world. I'm a full-time trader, and I'm known throughout the Forex community as FX Pathfinder. You may have already seen me, heard of me, or read about me in the following areas: Your Trading Edge, FX Trader Magazine, Equities.com, Forex Crunch, Executive Trader, TraderPlanet.com. I am a contributor to many premier entities within inside of the Forex network. I have made over 42,000 pips net, winning over 76% of my trades, and I'm on my 15th month of consecutive gains. So with that being said, let's jump into the live market. Let's go ahead and get started and make sure that you as an investor is empowered to make sure that you take advantage of the breakout. So these are going to be the currency pairs in which we're covering. Please write them down: pound yen, pound NZD, pound CAD, and pound Aussie. Type in done, D-O-N-E, when you've written these down. Once again, they are, and I'm writing them down as well. We're going to start them from scratch. GBP, JPY, GBP, CAD, GBP, NZD, and the Great British Pound, Australian dollar. Type in done, D-O-N-E, when you've written all four of the currency pairs down. Okay, perfect, perfect, perfect. A few more moments to write them down, and we will get started. Okay, so we're going to pull up the first currency pair, which in my opinion is the easiest currency pair, which is going to be the Great British Pound against the Japanese Yen, GBP, JPY. So this is the Great British Pound against the Japanese Yen. And I like to start out with the monthly time frame. And the reason why I like to start out with the monthly time frame is because I'm trying to focus in on direction. And direction is very, very important to me as an investor. If you buy the market and the market goes up, you win. If you sell the market and the market goes down, you win. So making sure you enter in the right direction, even if the market goes against you for a little bit at first, but making sure you enter into the right direction is really going to be the make or break for most people inside the result. So we got to make sure we get it right. So pound yen monthly time frame, when I look at this, what I'm trying to find is U-turns. I want to know where the market forms high prices and where the market forms low prices for the most part. Now, when I look at the Great British Pound against the Japanese Yen, one of the things which I notice is there is what's called a floor of support, an area within the Forex market where the market forms lows. And every single time the market has touched this or come near the bottom blue level, the market has decided to reverse and go up thousands and thousands and thousands of pips. And so when I look at this pound yen, I think to myself, okay, let's look to buy this market. And where to? Well, if the market is able to rally towards the top blue level, opens the door to another 9,900 pips. So we have about 10,000 pips of bullish opportunity towards the north, okay? So you as a trader, you need to look to buy. And if you look to sell, you're going to be challenged long term because the selling opportunity is pretty much over. Now, we need to bring in some evidence to support that because you can't just say, hey, the market's going to go up just because. The evidence which supports the bullish reversal is the following. Well, number one, when the U.S. had the elections and we had this market form a relatively large bullish candlestick, that occurred on support. Number two, the market broke the overall downtrend line, indicating that the bears have lost the control. Number three, when the market rallied up and formed a high price of to left to the right, the market has since then retraced bearish and has held at an area of U-turn where you can see this red line for about 7 months. 1, 2, 3, 4, 5, 6, 7 months. The market has held at this position. Now, I look at this and I say to myself, okay, well, let's look to buy the market. Market hit a layer of support, looks as if we're forming a morning star, a decision, indecision, decision. And if I were to draw an up A, B, C, D swing, it can begin to help guide me and to assist me as an investor to take a long position towards the north. Now, A, B, C, D extension, 16307, 16307. So 163.07 is going to be the monthly D, okay? This is going to be the limit. And this limit is 16307 is going to be 16307 minus 14250, where we are now is 2,057 pips away. 2,057 pips away, okay? Now, if you and I were to place a buy trade right now, and we were to walk away and come back 6 months from now, percentages say that we would limit out. Type in yes, why yes, if you understand that. If you and I were to just simply place a buy trade and walk away for 6 months, percentages say that we would limit out, okay? But what we want to do is we want to strategically maximize the returns and figure out a way to turn this 2,000 pips of opportunity into like 4,000 pips of opportunity. Type in ME, M-E, if you like the idea of doubling the opportunity on the screen. Now, if you want to double the opportunity, you have to be intentional about doubling the opportunity, which really means that we have to strategically buy low and profit high and take advantage of the wave movements. Now, I'm going to bring in another time frame, same currency pair, just another time frame. And I'm going to bring open the daily time frame. And off the daily time frame, you're going to see the market push up and push down for days at a time. If we see a low price off the daily time frame, I would like to buy in. If we see a high price off the daily time frame, I would like to be conservative and wait. Okay? And so let's do that. Now I'm going to bring open and open up the Great British Pound JPY off of the daily time frame, GBP JPY, off of the daily time frame. And the very first thing that I want to do is carry over my limit, which is going to be 163.07. We're going to go 163.07 is going to be the monthly D. That will be the limit. That is 2,057 pips away. All right. Now 2,057 pips away. If I were to draw my smart trend lines and I were to extend this, edit, 5, and I were to say, okay, well, low price, low price, low price, low price. My uptrend line's working. If I bring in my up A, B, C, D swings, I have a daily D extension at 15138. 151.38 is my daily D. 151.38 is going to be the daily D. That will be my limit. And how far away is that? 15138 minus 14251 is 887 pips. So 887 pips away. Okay. Now, what does this really mean? What's the difference between the monthly D and the daily D? Okay, here's the big difference. The difference is this. Markets, percentage speaking, do not move in straight lines. So we're going to expect the market to rally up to this daily D and then have a retracement. Then we're going to expect the market to rally up again, hit the monthly D, and have the retracement. Type in the yes if you can see this. Education specialist, can you please be so kind to respond to Alex in the question section box? Alex, we're going to have to, it's important that you speak to your education specialist. We're going to make sure that you as an investor are well taken care of. I'm also going to give you our number here at the office. Make sure you give us a call, my friend. But we're going to reach out to you, but just in case we can't get a hold of you, go ahead and reach out to us as well, okay? Now, as a trader, what we need to do is focus in on the movement from where we are now, because the reality is this is how we're going to make our money. We're going to make our money from where we are now to the first D extension. Judy says, you don't think it will retrace to the trend line before the D extension? Yes, I do, and that's what I want to talk about next. Okay, because I want to put this together, because Judy says, hey, you know, I'm looking at this and it looks like the market's going to pull back before it goes forward. And I agree with that. And so let me ask this question. Do you think the market's going to rally 800 pips inside of a straight line? Do you think it's going to rally 800 more pips inside of a straight line? Yeah, Mardia says no. Manu says no. Lyle says no. Rick says no. But more than likely, the market's going to move in a wave. And what that means is more than likely, the market's going to do something like this. Higher highs, higher lows, higher highs. And more than likely, the market's going to create like an AB boundary. And if we were to plot, hypothetically, an AB boundary, we pretty much got a D extension towards the north. So basically, you and I, what we need to do is we need to make a decision. The decision is going to be, Do we buy now? Do we wait for the retracement and buy later? Or do we try to sell the market? Here's my experience, okay? My experience is this. If you sell this market, there's more ways for you to lose than there are ways for you to win. If you buy the market, there's more ways for you to win than there is for you to lose. Because the reality of this is even if you buy it right now, the market's going to go against you, but eventually it's going to go for you. Okay? Now, strategically, we want to wait for a lower price. This way we can avoid some drawdown. But if you sell this market and the market just decides to go up and never pulls back, then you're in trouble. Does that make sense? And so you and I have to do what we need to decide is where is that high price going to be, and then where's that pullback so we can buy later, okay? That, in my opinion, is a very, very appropriate way of investing. So here is the old downtrend line. And this downtrend line has been broken, and this market is now in the buy zone. You and I need to make the decision on do we want to buy the market right now, or do you want to wait for the pullback? For me, the answer is really simple. I do not enjoy buying the market after the market has already gone up for 1, 2, 3, 4, 5, 6, 7 days. Type in yes if you understand that I don't like buying the market when it's at a daily high price. I enjoy buying the market when it's at a daily low price. So my style of trading is to wait for the market to retrace bearish to give me a low price. Where can that low price be? Well, usually the market's going to give you a low price at an area of resistance becoming support. And that's going to be at this price point. Go ahead and zoom in here. 140.07. So 140.07 is going to be a daily future support. Great place to start buying an up A, B, C, D swing towards the daily D. Okay? Now, let me circle it. Here is the decision that you need to make, and I would like for you to make it now. Are you going to try to sell the retracement, or are you going to wait for the low price to buy it? If you're going to sell the retracement, type in yes. If you're going to wait, type in wait. Just make a decision. If you're going to sell it, type in yes. If you're going to wait for the retracement, type in wait. What I want you to do is make a decision and follow through with that decision. I don't want you to say I'm going to sell and then wait. I don't want you to type in wait and then sell. I want you to make a decision and stick with that decision. That's what being a Forex trader is all about. Now, I will tell you, percentage speaking, in the long run, over 100 trades, if you wait for the low price and then buy, you will win more trades than you lose, percentage speaking, over 100 trades. If you try to sell this market on the way down, you may make money off this one example, but in the long run, you're going to encounter more losses. It's difficult trading daily short-term retracements. So for me, I look at this and I say it's Tuesday, you know, by Wednesday, Thursday area, I'll be buying this market. So type in done, D-O-N-E, when you understand that I will not be selling this market. Instead, I'll be looking to buy this market towards the north. Just type in done, D-O-N-E, when you understand that I'm waiting for a daily low price before I start buying the market. Okay, perfect. Let's move on to the next currency. So that is the Great British Pound, JPY. If we strategically can do this right, it will open the door to well over 1,000 pips. But as of right now, it's 887 pips. But after the market pulls back, it's going to give us more buying opportunity on the upside. Okay, perfect. Excuse me. George says, I do not want to waste my time. Can I sell a little bit here, there? George, that's a decision that you have to make. I'm not doing it. I have encountered more losing trades, trying to trade short-term daily short-term retracements versus focusing in on trading in the long-term direction. So in my opinion, if you want to win more trades in the long run, wait for that low price. If you want to scalp or day trade on the way down, is a decision that you have to make. Just understand that there is higher risk or more risk involved. As long as you're okay with that, as long as you're empowered with that knowledge, you can make the decision, okay? Now, most of it is just you fighting temptation. That's the reality of it. Most of it is just you fighting temptation of what you want to do. Okay, so next is going to be the Great British Pound against the Canadian dollar. And the reality of this is a shift is going to take place. Now, we just had what's called the pound breakout prediction, and the markets broke out. And this may be the beginning of the end for this prediction, and we're going to be looking for a new one and moving away from this. Now, think about this for a moment. We said, hey, you know, on the Great British Pound Canadian dollar monthly time frame, 1.6 thousand, as long as the market stays above 1.6 thousand, only look to buy. For those of you who have been with me for a few months, type in yes, why yes, if you agree that that's been the tune in which we've been singing this entire time. As long as we stay above 1.6 thousand, we're going to buy. As long as we stay above 1.6 thousand, we're going to buy. Why did we say that? Excuse me, it's 1.6200. Why did we say that? Because we said at 1.6200 is the area of U-turn. As long as we stay above 1.6200, we're going to focus in on buying. That's all we're going to do, okay? The market finally broke bullish. Now, if this market is going to push bullish, where is it going to push bullish to? Well, if you really think about this, that the market formed lows at 1.6200, which is extremely reliable, then we should focus in on an area of U-turn that has U-turned the market before. So this low price is 175.38. So we're going to go 175, 1.7538. And we're pretty much right there. This high is 174.90. So we came within, 100 pips of our limit. And if the screen is gray, you may want to sign out and then sign back in. Just because it might be just a like an internet thing. But 1.7538 is going to be the monthly future resistance. How far away is that? 75.38 minus 74.19. There's 119 pips left. Okay. We are coming down to the wire on the Great British Pound Canadian dollar to where there is 100 pips remaining of buying opportunity, and then that's it. Then it's over with. Okay? So if you have generated the lion's share of the move thus far, you may want to focus in on another currency pair. But percentage speaking, this mark is more than likely going to hit it. This high is 75.44. This high, 75.23. These lows is 75.38. So 7,500 seems to be the sweet spot. We hit 74.90. Here's my question for you. Do you want to start buying this market now? Or do you think we should just leave this one alone and say, this was a fun ride, we had a great buy, opportunity's over? Just think, I just want you to think. If the market U-turns at, on, or around this green line, which we're at, on, and around right now, do you really want to buy the market? Or do you want to move on to the next one? Percentage speaking, it would be extremely silly of us to start a buying plan now. Type in yes if you understand that. There is a simple rule of thumb. You do not buy the market when it hits future resistance. We are just underneath it. We came within 100 pips of the level and the market's stalling out. The bears are more than likely going to begin to take control of this market. I do not expect it to be a sharp bear move. I do expect it to have about a week of fighting it out. So the Great British Pound Canadian dollar, in my opinion, the buying trade is now over. Type in yes, why yes, if you understand that the Great British Pound CAD buying opportunity is now over. We can no longer look to buy the market. If you wanted to buy the market, you should have been buying it in the last 2 months, as we've been saying, to buy, 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 buy. Now that the buying move has already came and that the market has already exhausted itself, now is not the time to buy. Now is the time to say, let's take profits. So if you are in the Great British Pound Canadian dollar, you're going to want to take your profits, okay? Now, let's move on to the next currency pair. So Pound CAD, no more. Now, here is where you as a trader are going to fight with yourself. Because if the market keeps going up, you're going to say, oh no, I should have bought the market. No, what we are doing is we are applying the habits which generate the most amount of money over 100 trades. And the habits state that if we buy, we will lose. So we're leaving it alone, okay? We're not going to start the selling process now. We're going to give this about a week of wiggle room to really figure out what it wants to do. And then my thought process is let the month close. And then next month, if we see the bearish reaction take place, we can start selling off the smaller time frame. But let's give the market the rest of the week and have the monthly candlestick close, okay? Now, next currency pair is going to be the Great British Pound NZD, GBP NZD. GBP NZD. And the Great British Pound NZD, let's remind ourselves the reason why we were looking to buy this market. We were using a price action swing Fibonacci, A, B, C, D. Granted, I know this is not too left to the right, but it was the only thing that we had going for ourselves, okay? Now, all I want you to say is yes or no. Did the market hit this 1.618 extension? Yes or no? Okay. Did we form a piercing line? Yes or no? Did the market test the bullish candlestick formation and fail? Yes or no? For those of you who've been following me and following this prediction, have we focused in on buying these low prices? Yes or no? And it was tough. We were forced, and we said, keep buying, keep buying, keep buying, keep buying, and then now the market is pushed bullish. And it was tough. It really, really was tough, especially when we experienced 2 entire months of bear movement, but we said, keep buying, keep buying, keep buying. Now, where are we looking to buy the market to? Well, the market forms highs and lows within inside the same areas over and over and over again. Here is a layer, 85.41, in which we were using for a limit. And we were saying, hey, if it closed above this support becoming resistance, buy it towards 85.41. The market has fulfilled our limit area and to where there is no more profit opportunity. The long trade of 84.91 came within 50 pips of fulfilling the limit. I'm not interested in continuing the buying process with the Great British Pound NZD. Now, I am expecting that this market's going to have a little bit of a retracement. A lot of it has to do with the market to move in waves in regards to the market making higher highs and higher lows and higher highs. Type in a yes if you can see the latest wave movement. Now, if you wanted to buy this market, you should have been buying this market in the last couple months, but the buying opportunity is now over. Go ahead and type in done, D-O-N-E, when you understand that there's no more buying opportunity in the pound NZD, and we're going to move on to the next currency pair. We're going to have to change the prediction because pretty much all of our limits have been fulfilled. Okay, perfect, perfect, perfect. Our last but not least is going to be the Great British Pound Australian dollar. And with the Great British Pound against the Australian dollar, GBP AUD, we're going to pull up the monthly time frame. Sean says, how about selling them? I agree. There's going to be some really great short opportunities coming. I just want to give the market some wiggle room because we just had these drastic bullish movements. There's still a lot of momentum going up. I want to give the market till the end of the month, and then next week we can start looking for the short trades. I'm going to be looking at other currency pairs today, which I think that we can begin to actively invest in today. But because it's a prediction, I want to cover the prediction so that everybody is well aware of it. Now, Great British Pound against the Australian dollar. We've been focusing in on buying the market as long as it stays above 1.6 thousand. And so 1.6 thousand marks the area of U-turn. So we have a low of support, height of resistance, height of resistance, height of resistance, low of support, low of support. So we stayed focused in on buying the market because the market is hitting a U-turn level. Now, we've been buying this market and we said, hey, you know what? Let's focus in on closing our positions around 1.7 thousand. Why? Well, 1.7 thousand is monthly resistance. And that's going to open the door to about 1,000 pips. Buy 1.6 thousand, make 1,000 pips towards the north. The reason why we want to look to limit out there isn't because we just have a feeling, but because the market U-turns. Market formed a low, market formed a low, market formed a high, market formed a high, market formed a high. Do me a favor, type in yes if you can confirm that this market has fulfilled our targets of 1.7 thousand. Here's a live market. We went to 1.7109. We have fulfilled our limit. okay? We have fulfilled our target of 1.7 thousand, so there's no more trading opportunity on the pound Australian. Okay, so let's recap this. Pound Aussie, pound NZD, and pound CAD, there's no more buying opportunity because we fulfilled our targets. The only trading opportunity which we do have is the Great British Pound against the Japanese Yen. Type in yes, why yes, if you understand that this pound prediction with this latest movement over the weekend and last week has pushed the market to fulfill successfully our short-term targets. Now, with it being 7:36 p.m. Eastern Time, I would like to make sure that you as an investor are well prepped and well prepared and have trading opportunities. So I do have a currency pair which I think could produce some really great income this week. Type in ME, M-E, if you want me to share that with you. It's a currency pair outside of the prediction, but it is a currency pair that is available to invest in now. Okay. This is going to be the euro against the Canadian dollar, EUR against the CAD. Great job, Eli. Fantastic, my friend. Congratulations. Congratulations, congratulations. Now, the euro against the Canadian dollar monthly time frame, we have this market actually giving some very fantastic structure. And the structure behind this is brilliant, in my opinion. It's very, very reliable, it's very straightforward, and it's very easy to read. So you have a height of resistance where when the market comes near this high price, the market begins to fall. And then when the market comes to the bottom or this low price, the market begins to rally. And what this means is that this market is inside of a channel. The top of the channel has been fulfilled. We are expecting that the market is to shift bearish and fall down towards the south. Now, this is where you as an investor, you need to really ask yourself the question of, do you believe this? Yes or no? And the question is, do you believe that the market's going to fall bearish because it touched the blue line? And so let me just help you make that decision. When the market touched the blue line of resistance the last 3 times, did the market fall down from resistance toward support? Yes or no? Okay. So if you view this, you can see how the market never came back up to retest. It just started waving down, started waving down, started waving down. We're going to expect the same exact thing to happen now. We're going to expect the market to wave down. And when I look at the euro against the Canadian dollar, I say to myself, okay, well, we hit resistance. Let's look for evidence saying that the market's going to fall. WOJ says, why do you make the blue line so wide? I do that because I want to share with investors and help traders to be aware that these blue lines are not exact price points, and that these blue lines are going to show U-turns. And so these blue lines, with them being as thick as they are going to act more as boundaries than anything else, to where sometimes the market U-turns on top of the blue line, sometimes the market U-turns in the middle of the blue line, and sometimes the market U-turns at the bottom of the blue line. Okay? David says it's also just to get your attention. Very, very funny. Okay, very funny. Okay, all I want you to say is yes or no. Is the market hitting a downtrend line, bearish, right now? Yes or no? If we were to draw a down ABCD swing, we have a 618 retracement, arguably 50618 retracement. D extension is the 1.618. 2991. 1.2991 is going to be the monthly down D. This will be the limit. Which is going to be a total 4830 minus 2991, 1839. Would you be happy selling the euro against the Canadian dollar and making 1,800 pips? Would you be happier making almost 4,000 pips from this? Absolutely. See, what I want to do is I want you to understand that according to the percentages and according to the structure, if you were to place the sell trade towards the south right now, you could look to make over 1,839 pips if you just place a short trade and were to walk away, like 5 to 6 months from now. But if you strategically enter into the market selling high prices and closing out at low prices off the smaller time frames, in my opinion, you can turn this into almost a 4,000 pip opportunity. And that's what I want to show you. That's what I want to show you how to do. Okay. Now, I would like to open the door to the daily time frame and begin to track the overall bear movement. I understand that, Benjamin. But the good news is, you know, it's going to come back your way, and you're just going to have to go through, you know, what great traders do. You know, you're going to just have to hold the position. That's what great traders will do. And the neat thing about it is you do have a positive rollover by holding the short trade, and eventually it will come back down your way, which is always a good thing. So this is what I want to do. I would like to mark off the daily time frame the end goal in mind, which is 1.2991. And what I would like to do is 1.2991 is the monthly down D. That's the limit. That's 1,839 pips away. And what I want to do is ask the question, do we sell now? Do we sell the market right now? And if we sell the market right now, where do we sell it to? How I look at this is I say to myself, this thing is overbought. This thing is completely overbought. This thing is due for a bearish drop. Now, if I were to draw up A, B, C, D swings, I really don't have anything that really helps me here because this old A was taken out. I guess I can draw this A-B boundary there, and let's just assume this is the A and that's the B. We hit the aggressive D extension. You know, here's what I like to do. You may want to write this down. If I think the market is going to fall, I like to place a line on the chart and look left. If the market has formed highs or lows on that price point, then I know I will more than likely win that trade. See, one of the things what you're going to discover as a trader is that these markets don't form random highs and lows. You may think they do, but once you intimately begin to place trades over and over and over again and you truly discover the wave movement, you're going to realize that the market does the same things inside the same price points over and over and over again. And if you can just learn how to do those same things and within those same price points over and over and over again, more than likely you're going to win. So watch what happens when I bring on a line. So all I want you to say is yes or no. Does the market have history of forming U-turns at, on, or around this line that I just brought in? Okay, yes. For me, that builds lots of confidence that we're probably going to fall. So my question to you is, well, is this enough information to build the confidence for you that we're going to get a bear drop? I like the idea of saying, let's go to the 1 hour time frame. Let's look to sell this market because we're hitting a downtrend line off the daily, and we're also hitting a proven area of U-turn. So we have 1,839 pips of bearish movement. Let's go to the smaller time frames and let's look to start the selling process. Because if we do that, well, we can generate returns. And it all makes sense because what we're doing is we're stacking all the odds in our favor. The question is, for you, is this enough information for you to say, yeah, I want to sell too? Most people, the answer is yes. So what I'm going to do is I'm going to bring up the 1 hour time frame. And I just want to look to sell the market. I want to look for supporting evidence that the market is U-turning now. So let's just ask the question. Here's the 1 hour time frame. If the market is to fall bearish, let's just say it does fall because of all the reasons why we explained. Where do you think the market's going to fall to? Let's just say you sold the market now. Let's just say you just did it. Where would the market fall to? Stop and really think about it. Where do you think the market will fall to? Well, the market's not going to fall in a straight line. So what does that mean? That means the market's really will not do this. The market's not it's not programmed unless there's like a major fundamental announcement. It's not programmed to do something crazy. Okay, which means it won't do this. The market's going to do something like this. You and I have to discover where these future low prices will be, to where if we sell the market now, we can strategically exit the market, okay? So again, if you kind of look to sell the market and say, well, if I'm going to take a limit, I want to limit out where the market forms highs or lows, you can use what's called resistance becoming support. And what you discover is that the market has an area of resistance becoming support. Here's a high price. 1.4688. 1.4688 is going to be a 1 hour future support. I want to use that as a limit, and that's going to be 4688 minus 4829, 141 pips away. Now, again, this is just a short-term pullback. So what does that mean? Well, what it really means is this. Lower lows, lower highs, lower lows, lower highs, lower lows, larger pullback, lower lows, lower highs, lower lows, lower highs, lower lows. That make sense? Okay. Now what you need to do is you need to say, okay, I have my exit. Where do I want to enter in? How would I like to enter in the market selling? We've already broken the inner trend line. Okay, so the inner trend line's been broken. So that's a good thing. Okay, it means there's a transfer of power. There is an up ABCD swing to where most recently the market has fulfilled the D extension of the 1.618. So why is the market falling? Well, the market's falling not only because of the daily time frame hitting the downtrend line, but also because the 1 hour hit a D extension. So here's what you need to understand. If you entered in selling right now and you come back tomorrow, percentage speaking, you're going to make 141 pips. Type in yes, you understand that. If you just sell the market now, you don't really care about drawdown too much. Within 24 hours, you're going to make 141 pips. What you have to ask yourself is, how much exposure do you want? You know, a stop, I like a larger stop, but some people don't like to place stops as large as I like. You know, realistically, you can place a stop 20 pips above this, 10, 30. So you can really have a stop at price point 1.4930. Which 4930 minus 4831, that would be a 100 pip stop. If you were to sell this market right now, you have a 100 pip stop, and then you have 141 pip reward or limits. So why would somebody not sell now? The reason why somebody would not sell the market right now is because they understand that the market moves in waves. And what they're going to look to do is they're going to look for this market to rally back up and retest this high. And then what they're going to do is they're going to look to sell that high price on the way down. Now, strategically, what you can do is you can begin to discover that if the market is to pull back to the high price, which percentage speaking more than likely it will, you can sell this market with a counter trend line break bearish. What that will do is two things. Number one, it will shave off some risk. And number two, it will increase your profits. So if we just typed out entry, counter trend line break bearish in the sell zone, and we were to guess that would be the counter trend line break, you would have about a 78 pip risk. And that would make your reward about 161 pips. Now, That's about a 1 to 2 risk versus reward. Here's my question to you. Do you want to sell the EuroCAD? If the answer is yes, type in done, D-O-N-E, when you have this copy down. Type in done, D-O-N-E, when you have this copy down. Now, for those of you who are searching for confidence, I am already selling this market. I have already entered in the market strategically short. I believe that this market is falling. So for me, I'm already selling it. But it's a little bit easier for me to make these decisions because, number one, I've been doing this for 8 years. Number two, I have the advantage of tremendous experience. And number three, I believe in my formula. For those of you in this room who are kind of new and you're going through that trust building phase of trusting yourself, it's important that you as an investor get to an area to be comfortable in trusting your analysis. Now, what you can do is you can kind of lean on me and you can borrow some of my trust and you can just kind of just do what I do. And if you just do what I do, then you should receive some similar results, okay? Now, because I want to make sure that you're properly served and I want to make sure that you're getting tremendous value out of these presentations, what I want to do is ask you to type into the question section box a currency pair in which you're actively trading. And I want you to type in if you're actively buying or actively selling. And what I want to do is try to pull the majority. Okay, and I'm going to try to pick a currency pair that most of you are investing in. Now, we've already covered the pound prediction. We know that the pound yen is the only one that hasn't hit its limit. Everything else is pretty much maxed out. Okay, so we introduced the EuroCAD, which is something which you can trade tonight. So within 24 hours, you make 141 pips. But now I want to pull one more, and I want to see majority rules of what you're looking to do, okay? So there's quite a bit of investors who are trading, and a lot of JPYs, a lot of investors are trading the Japanese yens. And now it just comes down to what JPY. There's a lot of Euro yens, there's a lot of USD JPYs, and there's a lot of pound yens as well. There's also Australian dollar JPY. Okay. Let's look at the euro against the Japanese yen. It seems to be relatively strong. Many investors seem to be typing in Euro JPY. Some traders are buying and some traders are selling. So it seems as if that's not a very one-sided opinion. It's just there's a lot of traders trading the Euro JPY. So let's take a look at it and see whether or not you should be buying, whether or not you should be selling, okay? So you have half the room that looks as if it's buying and half the room that looks as if it's selling the Euro yen. Now, if you're in this market and you are new at trading, you may be asking yourself, well, how can some traders be buying and some traders be selling? Well, it really depends on their approach. You see, markets move in waves, so some traders could be position trading the buys, and some traders could be scalping the sells, which means they're both right. It's just when the position traders go through drawdown, eventually they're going to be pushed back into the profit, but as they're going through drawdown, the scalpers are making money. What I need to do is as your mentor and as your educator, I need to make sure that you understand what the short-term moves are and what the long-term moves are. See, if you're selling the market and you know it's a short-term move, then you're doing the right thing. But if you're selling the market thinking it's a long-term move, then that's where I need to step in and say, wait a second, let's relook at this. Does that make sense? And vice versa for longs. Okay, so when we look at the euro against the JPY, one of the things which we need to focus in on, especially when we look at monthly time frames, is the fact that this market moves within very similar market movements. And the reality of this is this market is at a low support and this market is at the height of resistance. So there's resistance, there's support, there's resistance, there's support. And when the market touches resistance, it just pretty much falls down to support and vice versa. Well, this market is moving from support towards resistance inside of the big consolidation range. And one of the things which we can bring in, which is actually a very, very smart thing to do, is we can bring in up ABCD swings. And when we look at the up ABCD swings, we can see there's an A, then there's a B, then there's a C retracement around the 50618 retracement. The extension is 1.618. So the end goal in mind is that the market is expected to fulfill 158.34, which is going to be the Euro JPY monthly D. That will be the limit. 15834 minus 12138, 3696. 3,696 pips. Okay. Why buy now? Why is the market going up now? Well, if this is the A and that's the B, why would this be the C? This downtrend line. Here's what I want you to answer. Does the market U-turn at, on, or around this downtrend line? Yes or no? Yes. So the market has history of going down, 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 going up, going up. When we bring in up sub-ABCD swings to help predict the overall rally, what we discover is that we are inside of an up sub-ABCD swing with right around a 618 retracement at the backside of the trend line with a counter trend line break bullish. Granted, we do have to close within the week for the month, but with the counter trend line break bullish in the buy zone, making the sub-D extension the 1.618. So long term, it's very, very difficult to argue against the rally towards 133.27. So 133.27 is going to be the Euro JPY monthly up sub D. That will be the limit, which is how far away? 13327 minus 12142, 1185. 1185, 1,185 pips. So the reality of this is, if you were just to place a buy trade, and you were just to walk away, this is all you did. You just placed the buy trade, and then you walked away. The fact of the matter is, this market is anticipated and expected to rally 1,185 pips, which means in like the next 4 to 6 months, by just placing a buy trade, you should make 1,100 pips easily. But what we want to do is we want to strategically double the opportunity and turn this into over 2,000 pips. So how do we do that? Well, what I'd like to do is I like to go to the daily time frame. And what I like to do is I like to say to myself, okay, well, I'll just buy the market at a low price. And if this market gives me a low price, I'll enter in long. And if it's at a high price, I'll kind of back off a little bit. Now, this is where I am separated from the new traders, because the new traders, what they would like to do is they would like to sell the market. And if you have a strategy that supports that, Euro JPY monthly up sub D, that's the limit, then follow your strategic or your advanced strategy. But for the most part, what I have found as an investor is if I just stay focused in on trading the bigger picture move, in the long run, I will make more money. Because why? The market will extend faster than it retraces. And I may be in a drawdown. That won't be that big of a deal because eventually the market will go my way. Now, if I were to draw up A, B, C, D swings, what I have here is an up AB boundary with a 618 retracement, making my daily D the 1.618 or 130.04. So ultimately, the next major pullback is going to be at 130.04. That will be the daily D. That will be my first limit. How far away is that? 130.04 minus 121.47 is 857 pips away. 857. Now, excuse me. Here's your choices. You can buy the market now. If you buy the market now, walk away in a few months, you make 857 pips. Type in yes if you understand that. If you buy the market right now, walk away, within a few months, you make 857 pips. Percentage speaking, that's what's going to happen. Okay. But if you buy the market now, you have to understand that this market's going to move in a wave. And the market is expected to come down before it goes back up. And what you have to do is you have to make the decision on how much drawdown do you want to expose yourself to. If you wait for the low price, you can strategically increase your profit opportunity and decrease your drawdown. You can trade up sub A, B, C, D swings, which will assist you in taking advantage of the overall rally. Now, to help you do this and make this decision, you may want to check the trend lines. And the reality of this, and here's the truth of the matter, the Euro JPY more than likely won't fall until it hits this downtrend line. Why? Because the market forms highs and lows over and over and over again. And the reality of this is, if you're buying this market, you have until this downtrend line, until the next major bear move occurs. If you are buying, I'm going to say this again, if you are buying this market, you have until that downtrend line, until the next major bear movement takes place, which basically means if you're buying this market, you're kind of playing with fire. There's only like 60 pips left of upward movement. If you are selling this market, expect the market to go against you about 60 more pips before it goes for you. I believe in the bigger picture move, and I believe that this market's going to rally bullish long term. I believe the market's going to do that in waves. I do not believe it's going to have a straight line move. So I'm expecting this market to come down first before it goes up. Type in yes, why yes, if this logically makes sense. Excuse me. Okay, so we're going to address something. You as a trader, when you see monstrous movements like you see in the last few days, it's very exciting. But the reality of this is the traders who are saying, hey, I've made thousands of pips. The traders who are saying, hey, I've made 3,000 pips this week. The traders who are saying, hey, you know, I'm making the most amount of money that I've ever made in my entire trading career. They are the traders who bought the market at a low price and believed and said, I believe this market's going to go up. And they reaped the rewards of their trust and their ability to analyze the market. Once the market rallies bullish this high, this is not the time to come in and buy the market. It really isn't. And so newer traders, when they see this, they get very anxious. They get very excited, and they say to themselves, I gotta trade. I gotta be one of these traders who makes all this profit. Well, if that's the case, you should have taken the action a few days ago. Now, what you're going to have to do is what most of us are doing, is we're going to have to wait for the market to reload. The only currency pair in which I really see providing great opportunity right now in my style of trading is the EuroCAD. And I think the EuroCAD is going to produce for you a very high winning percent short trade. And as the EuroCAD is falling, I believe the other ones are going to be loading up. So once you limit out the EuroCAD, then you opens the door of trading the other currency pairs. Make sense? Okay. Did you learn anything tonight? Did you learn anything? Did you see how a professional investor will stay extremely disciplined to generate the reliable income? And that's really what it takes to be a Forex trader. You just need to be disciplined. There are other avenues which you can use technology that can allow you to obtain the end goal in mind of results faster. And we can talk about that tonight if you want to. In my opinion, if you're brand new or if you're struggling with trading and you're kind of looking for an easier way or a faster way of generating returns, you may want to entertain the idea of participating in grid trading, G-R-I-D. It's called grid trading, G-R-I-D. Hopefully you've seen us demonstrate it for you. If you haven't seen us demonstrate it for you, it's actually really neat. I can talk about it tonight if that's what you want, but let me just ask the question. Type in yes if you know what grid trading is. Type in no and no if you don't. Just type in yes if you know what it is. Type in no if you don't. Well, the majority of you know what it is, and I'm really glad because we've been trying to be very intentional about demonstrating and sharing it and showing it to you. It's something in which we firmly believe is going to allow investors to win upwards of 90+% of their trades. It's something in which we believe is going to, if we focus in on the end goal in mind, if you don't really know too much about the Forex market, we have a strategy for you that can help you win upwards of 90% of your trades. If you are actively trading and you have your favorite entry strategy, we believe it's going to double your production. If you are a leveling trader, a mastermind trader, or a target trader, it's a must-have tool. It's going to make your life super simple. For the investors that are kind of, if this is your first time joining us, or if you've been out of the loop for a while, type in me, M-E, into the question section box if you kind of want me to give you a short demonstration of how grid trading works and the concept. And for those of you who already have it, if you just want to watch a refresher to kind of reinforce the excitement that's coming, you know, I would suggest you participate as well. Excuse me. So what I want to do is I'll go ahead and demonstrate it, And what I want to do is make sure that you thoroughly understand the concept. And the best way for me to explain this is just to kind of draw it out first, and then after I draw it out, then to show it to you, and then show you trade by trade. But essentially what grid trading is, G-R-I-D, grid trading is going to force you to take advantage of market movements. And grid trading has been around for a while. It just takes a lot of effort and a lot of time. And we've been able to automate that concept. And what I want to do is kind of highlight a grid for you, okay? Now, to get the full benefit of this, we want to empower you to kind of participate. And so the more you participate, I think the more it's going to sink in. And so what I want you to do is just type in yes, and just appease me if you can. Just type in yes if you agree that on this particular currency pair, that the market has just kind of stayed within inside of this yellow box. The market went up, the market went down, the market went up, the market went down. Okay. Now, if you think about it, and you look at this and you say, okay, well, if that's the case, what if every single time the market touched this price point, which is highlighted in green, what if I just bought the market? What if I just said, hey, every time it touches it, I'm just going to buy the market? What I want you to ask yourself is, strategically speaking, could you have made a profit as the market went up? So every time the market dipped, you bought, you bought, you bought. And of course, you would have strategic exits toward the top. Could you have made a profit? Well, what if you did the same thing, but at this level? Do you think you could have made a profit if you would have bought the market every time the market touched this level, and when the market went up, you just kind of took the run bullish? Well, what if you would have done the same thing at this level and this level? Do you think you could have made a profit? Now, what if when the market was going up, you bought from one green line to the other green line, and then from this green line to this green line, and then when the market went down, you sold it from this green line to that green line, this green line, this green line? Because the market stays within inside of the grid, and the market hangs out and does the same things inside the same areas over and over and over again, strategically speaking, it produces a tremendous amount of profit, and it allows investors to win upwards of 90+% of the time. Now, grid trading has been around for quite a while, but it is a tremendous amount of work. Type in me, M-E, if you would agree that this looks like a lot of work. This is just one currency pair, but it's kind of like you monitoring multiple price points and strategically buying and selling and buying and selling. And this is just only one currency. Imagine doing this off like 4 currency pairs and trying to manage all these orders. So traders will team up, and usually it's like 3 traders, and what they do is all 3 traders have a full-time position, and they manage grid trading. They manage all the orders, and they hope that they don't mess up. I've automated this. And here at Market Traders Institute, we've automated this process to where now a single trader can manage their grids part-time automatically. How many of you would like for me to share with you the demonstration of the formula of how to find your grids, so which you can duplicate right away, and how to launch the grid so it can manage your entries and exits? It's actually pretty amazing. So when I look at the Euro Australian dollar, we can do this off any currency pair. And I'll just bring up the Euro Aussie to demonstrate it first. And then we can pull up any currency pair of your choice. It's not a problem. The biggest thing that you have to do is you have to make sure you're following the formula. And what's really neat is I'm working with the programmers today. Actually, I sent them a text message, so I need to get with them tomorrow morning. But we're going to begin to automate the calculation of the formula, okay? So you can do this grid on any currency pair, any time frame. You know, just understand the larger the time frames, the larger the grid, okay? But what I want you to do is I want you to copy down this formula, please, okay? These are the steps. And we're going to help you automate this with technology, but these are the steps because I want you to know the formula. Step 1. Have 500 bars of memory. Number 2, find and mark the highest and lowest point on the screen. Number 3, measure the distance from the highest and lowest point. Number 4, times that number by 3. 5, divide that number by 2. And then number 6, divide that number by the number of levels in your grid. I am using 10. You now have the distance, now have the grid level. Type in done, D-O-N-E, when you've copied the rules. Find and mark, find and mark, find and mark. Thank you. Find and mark the highest and lowest point of the screen. Okay, very beautiful. Now, let's do this together. Now, I have my charts defaulted for 500 bars of memory, but to check your bars of memory, all you do is click on this little gear button to the left-hand side, and it pops up this little spot, and you just make sure that it just says 500 bars. So again, it's this little gear button for your settings, and just make sure it says 500. Number 2, mark the lowest point, and then mark the highest point. Now, measure the distance from the lowest point to the highest point. That's 604 pips. So 604 pips times that by 3 is what? It's like 1,800 and something. 604 times that by 3, 1812. 1,812 pips. Now take 1,812 pips and divide that number by 2. That's 906. Okay. Now take 906 and divide that number by the number of levels, which is going to be 10, which would be 906 or 96 pips. Now, what you can do if you're going to stay with 10 levels, which I plan on teaching inside the program, is you can just take the distance from this low price and high price and just times it by 0.15. Oh, excuse me. Let's go 906, divide that by 10 is 90. My apologies. So it's going to be 90. We'll round down. But what you can do is take from the low price to the high price, just times that by 0.15 if you're going to stick with 10. But I'm going to be doing all the math and helping you understand that. But every grid, I'm going to be teaching you grids with different levels in between, okay? But regardless, we have our numbers. Now, what I want you to do is just watch my screen. I have access to what's called the matrix. So I right-click over my screen and I see the matrix. So I say to myself, okay, I'm going to click on the matrix. This will automatically launch my levels for me. Now, numbers of levels. I can only have one level, I can do 2 levels, I can go up to 10 levels, okay? If you are a mastermind trader, a leveling trader, or a target trader, you're going to love this functionality because you can pick the side. And what I mean by that is you can just have 10 levels above the market, below the market, or you can grid trade and do both sides. Since we're grid trading, we're going to do both sides. You can decide to buy the market or sell the market. You can decide the distance, which the distance will be 90, okay? And you can decide your lot size. Now, this button right here is extremely unique, and it is a must-have, and I love it, absolutely love it. This button, when I check it, it says close all orders on net pips. And so if I were to type in 100, what does that mean? That means this. If this market were to hit if this market were to push me into the profits 100 pips, it would automatically close my trades out and remove my grid. Type in yes if you understand that. Now, I could be in one trade and be up 100 pips, and I would automatically close. I could be in 3 trades, and if I were net profitable 100 pips, I would automatically be closed out. It's actually really, really neat. Now, I could type in whatever number I want. If I typed in 300, if I was up 300 pips, I can automatically close out. Now, I'm going to teach you 2 strategies tonight. Strategy number 1 is designed for traders who are brand new. Traders who know absolutely nothing about the Forex market but still want to win upwards of 90% of the time. I'm going to share that strategy with you tonight. And then I'm going to share with you, if you're an active investor that is educated, how to amplify your returns and turn any strategy that you love into a 90+% winning ratio. Now, I can do stops, I can do limits, which I'm going to share with you when we get into the advanced strategy. Now watch this. Everybody ready? Really watch your screen. When I select OK, it's going to automatically apply my grid. Ready? 3, 2, 1, release. Type in yes if you can see that my grid is now automatically placed on my screen within a fraction of a fraction of a fraction of a second. Now, let me walk you through the everyday life of a grid trader, and I will share with you what it feels like on a daily basis when the market goes your way and even when the market goes against you. And for argument's sake, what I want to do is I just want to say, for whatever reason, you made the decision to buy the market, for whatever reason. And we're going to share with you I know nothing about the Forex market, but I still want to win 90% of my trades strategy, okay? So what you're going to do is you're going to close out net the distance of the levels. So in this scenario, you're looking for a 90 pip closeout net. And you don't care if you limit out at 90 pips with 1 position or with like 5 positions. You just care about having 90 pip closeouts because you don't know anything about the Forex market, but you want to win 90% of the time. Let's see what happens, okay? Now, you enter into the market buying. If the market is to touch this top level, you limit out. Let's see what happens. Type in yes, why yes, if you can see that the market just limited out and that this would automatically close out of your trade. So that is net 90 pips. But you know, you don't really know too much about the Forex market, but you still want to win 90% of the trades. And so what you're going to do is you're just going to go ahead and relaunch the grid, and you're just going to trade it again. And let's see what happens. So little bit of sideways movement, that's okay. Market, still nothing. Bingo. Type in yes if you can see that the market just hit the next level. So therefore, you're out. You just made another 90 pips. But because you really don't know too much about the Forex market, but you still want to win 90% of your trades, what you do is you just say, hey, I'm just going to apply my grid. And I'm just going to grid trade this. So you enter in buying. So what happens? Well, you're letting this do its job. You walk away. You just let this do its job, and you're going to get 90 pip closeouts if you're up 90 pips. If the market goes against you, you're going to get protected. If the market goes for you, you're going to get your closeout. But let's see what takes place. And then the market falls. So you bought into the market, and now the market goes against you, and now you buy. Okay? Well, or the grid is going to buy you in. And let's see what takes place. Well, right now, if the market were to rally up to the original trade, you would make 90 pips. Your first trade would be break even. Your second trade would be 90 pips. Let's see what happens. Market rallies and bingo. Go ahead and type in yes if you understand that your first trade you broke even, and your second trade you made 90 pips, so therefore you had your closeout of net 90 pips. Does everybody see that? But because you don't know too much about the Forex market, but you still want to win 90% of your trades, what do? You buy the market. You reapply the grid. And what happens? The market goes to the next level, so you have another 90 pip closeout. But because you don't know too much about the Forex market, but you still want to win 90% of the time, what do? You reapply the grid. You buy the market. And let's see what happens. The market hits your closeout. So what happens? You have another 90 pip closeout. But because you don't know too much about the Forex market, but you want to win 90% of your trades, what do? You reapply the limit. Type in me, M-E, into the question section box if you're starting to see how profitable this truly is for an investor. Then the market rallies up. You get the gap is in your favor. You close out with 90 pips. What happens? You buy in. And because you don't know too much about the Forex market, you're just going to buy the market and reapply the grid. Market goes, let's see, market hits down. The grid takes you back in. Let's see what happens. You have another 90 pip closeout. So copy, paste. But because you don't know too much about the Forex market, what do? You just reapply the grid. Because why? You still want to win 90% of your trades. And so, but so you're just going to use grid trading to help you. And you get another 90 pip closeout. And you just continue to play this game. And this strategy, in my opinion, is going to serve investors tremendously. Okay. Now, what does this look like? Basically, this is your last month of trading, and you won 100% of your trades. And you had 1, 2, 3, 4, 5, 6, 7, 8 trades. Okay. And of your 8 trades, winning 100% of your net closeouts, that's 720 pips. So I'm going to show you my advanced strategy, but let me just gauge your happiness levels. Would you be happy with 100% net closeouts, winning all your trades in the last 30 days, and being up 720 pips? Yes or no? Would that make you happy? Furthermore, would it make you happier knowing that you are using technology to manage your grids, which basically is allowing you to do what normally takes 3 people full-time to do, but you're doing it part-time? Do you like that aspect? Okay. Let me share with you what it would look like if you decided to grid trade with tonight's opportunity. So we talked about the EuroCAD, and we said the EuroCAD's hitting a daily downtrend line, and the EuroCAD's hitting a level of resistance. We also said the EuroCAD is expected to fall 1,800 pips. And so then we said to ourselves, okay, well, we want to sell the market to price point 1.4688. What if we, instead of intraday selling with a stop and a limit or a 78 pip stop, what if we use the limit and we use grid trading to help us strategically exit the market? So let's make sure we remind ourselves of the rules. Number 1, 500 bars of memory. Number 2, mark the highest and lowest points. Number 3, times that number by 3. Number 4, divide that number by 2. Number 5, divide that number by the levels in your grid. I'm using 10. Let's do the math real quick. Okay, that's 1,000 bars. We've got to change it to 500. So we have 500 bars of memory. Here's the lowest point on your screen. Here's the highest point. The distance is 856 pips. 856 times that by 3, divide that by 2, divide that by 10 is 128. 128 pips. Watch what happens. I right-click over my screen. I left-click over matrix. I put in my number of levels. If you are a mastermind trader, a leveling trader, or a target trader, you're going to love this tool. Distance is 128. I'm going to do both sides. I'm going to sell the market. I'm not going to have a net pip closeout, but what I will have is a predefined limit at 1.4688. Now watch what happens. 3, 2, 1. Go ahead and type in yes if you can see that my grid was automatically placed on my charts for me within a fraction of a second, and that my grid stops at my limit. So what this means is that if by chance the market goes against me, I have the protection of the grid that will allow me to have the forgiveness, which I'm searching for automatically. And if the market goes my way, I will be able to strategically grid trade on the way down. And usually, for the most part, on average, it will allow me, on average, to double my opportunities. Which really means if I'm looking to make 140 pips, I could potentially make almost 300 pips. So, if you know nothing about the Forex market, what can grid trading do for you? Well, it can help you win upwards of 90+% of the time. If you are an expert in the Forex market and you're already generating consistent, reliable income, what can it do for you? Well, essentially, it can double your opportunity and provide you upwards of 90+% win ratio. If you have a favorite strategy, such as targets, stochastic RSIs, Fibonacci's, mastermind, leveling, your favorite strategy, your favorite system, what can this do? It can amplify the returns and the results. Most strategies are designed for specific market conditions. When the market conditions don't match up, you can apply grid trading to it to amplify your returns to win upwards of 90+%. Now, before I end this presentation, what I want to do is address the investors who are in this room. Type in me, M-E, into the question section box if you would like for me to give you the details of this program and how you can take advantage of enrolling into the program before anybody else. to receive the additional incentives that will only be available for you. Okay. It is extremely important that you as an investor understand exactly what you're getting so that you can make intentional decisions and appropriate decisions, okay? So let me make sure that I'm explaining exactly what this is. This is called Grid Trading Course. I'm the creator of this course. I'm the owner of this course. I will be the one that's going to be teaching you. I'll be the one that's going to be educating you, and I'm going to be the one that's going to be guiding you and implementing this, okay? So I'm going to give you 3 strategies. I'm going to give you a position strategy, a swing trading strategy, and a scout strategy. You're going to learn how to amplify your returns with optimizing any entry strategy of your choice. I'm going to help you win upwards of 90+% of your trades, and you and I are going to be working together relatively closely to make sure that you have all the content and that you have all the support and the ultimate confirmation of what you need to get this done right. Now, what do you get? Well, you're going to get a 4-hour class, on-demand recordings, access to the Matrix tool, 3 strategies, checklists and manuals and workspaces, and ongoing access to the class. You're going to receive universal trading with grid trading. You can trade directly from your charts. You can manually place trades. You can use alerts to place trades. You can create signals, which means if you like stochastic RSIs, you can have the grid automatically apply itself if the stochastic RSI is oversold or overbought. You can use price entries to where if you like Fibonacci's, if a D extension is fulfilled and you want to apply the grid on the way down, you can do that automatically. This is around-the-clock smart technology designed with you in mind. Now, I'm going to give you 1-month access of my live trading follow-ups. Matter of fact, I call these my fill-in-the-gap sessions. So what the heck does that really mean? Well, you and I are going to work with each other for 4 hours, and I'm going to train you and educate you and help you implement this. Then within 30 days, you and I are going to meet with each other again for 4 hours. And then I'm going to fill in the gap. That's why I call it fill in the gap sessions. I'm going to ask you and say, what are you struggling with? What's not working for you? Are you in any bad positions? Let me know so I can help you manage out of them. This will give you the ultimate confirmation to help you implement this appropriately. Type in me, M-E, into the question section box if you kind of like that follow through. And you like the idea of being provided the solution and having your gaps filled with the proper education. Okay, here's my expectations. This is going to optimize any strategy. It's going to amplify your results. It's a must-have for the following traders. If you are a mastermind, a leveling, or a target trader, you're going to love this tool. If you're a trader that wants to win upwards of 90+% of your trades, this is the program for you. And investors who want to take control of the wave movements within the Forex market. Now, this is what's called the Grid Trading Course. You're going to get manuals, checklists, and class recordings, live trading follow-ups, unlimited class reattendance. This has a total value of $3,495 US. And you hear me say this a lot, and there's a tremendous amount of truth behind it. We look at everything in which we do in our day-to-day as an investment, return on investment. And we really gauge whether or not we're happy with the end goal in mind based upon what we get. Now, whether you invest your time, your energy, your mentorship, your guidance, or your money, what you receive in return, you're going to say, well, that was a good decision or a bad decision. So what I want to do is help guide you on helping you make the decision on whether or not this is worth it. Okay, so what I want you to do is put your investment caps on, and I just want you to honestly and truthfully answer the following questions. If all grid trading did for you was help you make an extra $7,000 to $8,000 a month, month after month after month for the rest of your life, would it be worth the investment? Yes or no? If all this program did for you was allow you to generate consistent, reliable income through the Forex market that gave you the confidence to plan a vacation or for you to go out and finally buy that new vehicle or move into that new house, would it be worth the investment? Stop and really think about it. And if all this program really did for you was just allow you to learn the life skill to generate the returns what you're searching for so that you could retire in the next 12 months, would that be worth the investment? Yes or yes? Now, my friends, I came here to empower. I came here to educate. I came here to teach you enough information to allow you to make a financial decision to change your financial future for the better. And I also came here to make this extremely affordable. So, our original enrollment opportunity is over. And we have 35 more spots remaining until this opportunity is over. So what does that truly mean? It means this. We are having our second round of early bird savings to allow you to roll into the program with the best opportunity and the greatest savings up front before the class starts. To where, for those of you who take action and type your telephone numbers into the question section box, you're not going to have to pay $3,495 US. Matter of fact, we're going to give you a savings of $1,250 US, giving you the ability to roll into this program and receive our second round of early bird savings of $22.45. At this point in time, there's only 35 spots remaining for this price point. But at this point in time, what I want to do is empower you to provide what's called a soft hold micro commitment. And what does that mean? Well, it just means this. If this is something in which you want, I want you to type your telephone number into the question section box right now. And this is what's going to happen. When you type your telephone number into the question section box, we will provide a soft hold reservation. We will reserve one of these spots for you. There's only 35 left. We will contact you at the telephone number in which you provide. We will answer any and all of your questions. We'll put you in a position of empowerment, and then you can make a conscious decision, more importantly, an educated decision on whether or not you want to move forward with this. The neat thing about you typing your telephone number into the question section box is it gives you the first right of refusal. Because the seats are limited, and because there's only 35 more seats left at this early bird price point, it's something in which I would strongly encourage you to do. What I want to do is go ahead and recognize the following investors who just made that commitment, and I want to go ahead and say thank you for the opportunity. I want to say thank you to Daniel. I have your telephone number. I want to say thank you to Sol and John and Joseph. I got your telephone number. We'll have one of our education specialists contact you, and we'll answer any and all of your questions. I want to say thank you to Deb, and I want to say thank you to Ralph. I have your telephone number. Jorge, Greg, Mark, Walter, Soren, Lily, Nitin, Gary, Francis. I have your telephone number. We'll have one of our education specialists answer any and all of your questions. Now, it wouldn't be a presentation with me if I did not provide you thousands and thousands and thousands of dollars of extras. I love being able to give you extra incentives for taking action. I just find it to be such great joy when I can give you extra stuff. And so we do have two mega fast action bonuses tonight. And for those of you who are ready to get started right now, what I want you to do is type in bonus, B-O-N-U-S, into the question section box. Because when you type in bonus, B-O-N-U-S, into the question section box, here are the two mega bonuses that you're going to receive. Fast action bonus number one. You're going to receive a total of 3 months of live trading follow-ups exclusive with me. What does this mean? Well, once a month for 3 months after the class, we're going to have our fill in the gap sessions. So you and I are going to work with each other for 4 hours inside of the class. And then for a total of 3 additional months above and beyond that, we're going to meet up with each other for 4 hours, and we're going to have fill in the gap sessions so that we can make sure that we're providing you the ultimate confirmation and helping you properly implement this into your everyday trading, establishing the proper habits, answering your questions, and instilling the confidence that this can work for you. My second mega fast action bonus, which is my opinion is an ongoing savings. Now this is extremely strict. This is only available for 35 people. Even if you decide to enroll later on to the program, this will not be made available anymore. This is only for 35 people and 35 people only. 35 left and this bonus is gone, okay? Lifetime ownership of the Matrix tool. So what does that mean? Well, as long as you have the charting software, you will always own the Matrix tool, okay? Only available for the next 35 people. Now, what does that mean? Well, Market Traders Institute invested quite a bit of money at developing this. And what they want to do is, of course, as a business, there's overhead, and they want to obtain a return on the investment. And so because of the ongoing maintenance that this tool provides, they want to charge a monthly maintenance fee, okay? And so what that means is after you enroll into the program in the future and you receive the Matrix tool, you will be paying a monthly maintenance fee to maintain the Matrix tool. The next 35 people will be eliminating that monthly maintenance fee, saving you thousands upon thousands upon thousands upon thousands of dollars throughout your career as an investor. So let's just say, I don't know what the maintenance fee is going to be, but let's just say it's $100 a month. Well, that's a $1,200 a year savings. In 2 years, you're saving yourself $2,400 US by simply doing this now. So at this point in time, for those of you in this room that have made the decision to enroll right now, I want you to type in bonus, BONUS, into the question section box to receive the 3 total months of fill in the gap sessions with me, as well as eliminating that monthly maintenance fee, but it's only for 35 traders. And after the 35 traders enroll, then we can no longer offer this. Now, I want to say thank you to Shaw. I have you for bonus. Joe, got you for bonus. Ralph and David, I have you for bonus. Ralph H. and Gordon and Joseph and John O. and I have you for bonus. Damien, I got you for bonus. Lolei, I have your telephone number. MAN, I have you for bonus. Now, what does all this mean? Well, if you think about this, grid trading course, manuals, checklists, class recordings, live trading follow-ups, unlimited class reattendance, bonus number 1, bonus number 2, this is a total package of $5,485 US. You're still getting it for $22.45, saving you $3,240 US. Okay, so this is what I want to do. Because it's already 8:53, I want to expedite your onboarding process to kind of help you seal this in now, since there's only 35 spots remaining. In the question section box, I'm going to give you a link, and I'm going to have my team post the link in right now. So education specialists, if you could please be so kind to post the link in the question section box. What I will do is give this to you as well. Well, I don't see that link, but education specialists, if you could post that link to the 100% secured online sign-up page. I don't know if it's available. I don't see it in the doc. Okay, there it is. So let me go ahead and copy this. And if you take a look at this link that we just posted and sent you, this will give you the ability to enroll online with a 100% secured sign-up page, okay? And once again, it's going to be this link in the question section box. I'm sending it to you as well. $22.45, so your savings has already been reflected. Billing information, all you do is fill out your first name, your last name, address, city, state, zip code, country, phone number, email address. You can get started right now with American Express, Discover, MasterCard, Visa, credit card number, expiration date, place the order, and you are done. Okay, I'm going to leave this open here for the next 3 to 5 minutes. I want to say thank you very much for the opportunity to work with you. I want to say we take great pride in what we do here at Market Traders Institute. I really hope we've been able to serve you this evening and really assist you as an investor on the do's and don'ts within the Forex market. For those of you who express interest, stay by your phone. We're going to contact you right now. But on that note, every day, helping traders find a way. This is Joshua Martinez out.